In maths, the Greek letter delta, there it is used to denote change. And you can pencil a delta in front of the jobs numbers, which are going to be highly dependent on where the Delta variant takes the pandemic from here. The July numbers point to a continuing recovery. 5.4% unemployment rate is down from 10.2% last year. There are 8.7 million unemployed Americans. Now, 3 million more than pre-pandemic, which we'll talk about in a second. US wages are still rising. They're not as fast as earlier in the year, and that's a Goldilocks scenario in a sense, because there is wage growth, which is what you want, but not too fast, which is inflationary. Last month, 7 cents an hour, nearly twice that in April. And the course of the labour force has looked like over the last 2 years. The pandemic caused a deep, steep hole out of which the economy is still digging, and the pandemic is not in the rear-view mirror. The former White House Council of Economic Advisors chair is Laura Tyson. She joins us now, and it is always good to have you, Professor Tyson, to talk these issues. I'm so grateful. Now, look, let's first of all just reflect. They still say that 5.7 million jobs below pre-pandemic, but the unemployment rate is only 1% off where it was. I mean, we're down at 4.4, give or take. We're down at 5.4 now. So we are pretty much back on the employment front to where we were.
Well, I think it is the question of what you were predicting as the growth rate for the economy and the growth rate of employment pre-pandemic. That explains, I think, that discrepancy. We certainly are at the unemployment rate just reported is the lowest during the pandemic recovery. The employment population, which is a measurement of another measurement of the labor market, is at a now pandemic high. The labor force participation rate is up a bit, but it's still quite low. So part of this is the projected jobs that would have existed had there been no pandemic, and then the change in the behavior of workers, labor force participation rates, willingness, ability to go to work, things like that. Mm-hmm.
And yet this job numbers, it doesn't really factor in the Delta variant, the new mask mandates, and arguably, so we can't really quantify today's situation too much.
So I think it's really important to note that the big gains in the July employment numbers were in what I would call in-person jobs, okay? Personal services, leisure and hospitality, retail services, restaurants, education, it turns out, was a major source of net job growth in July. All of those are in person. And what happened going into July is that there was less concern. People didn't realize what was happening with Delta. And now I think there is a real possibility here now that the spread of Delta and the various things associated with that, such as, in California, we have mandates everywhere for masks, and every place you go into now, you need a mask, and it's all fine. But that can possibly slow things down. I just think we don't know. The whole pandemic, throughout the pandemic, what economists have said is the pace of recovery depends upon macroeconomic policy, fiscal policy, monetary policy, and it depends upon policy to contain and control the pandemic. And right now, that second area of policy looks a little like we need more progress in the United States.
Does the Fed look wise for having stayed the course? This is exactly what Powell was talking about, wasn't it? We don't know. And whilst everybody else is saying, start taking your foot off, with Delta on the horizon, suddenly it seems prescient.
Yeah, I think the Fed has been right all along. The Fed made it clear in the last comments of Jerome Powell, the CEO, chair of the Fed. So he said, look, our goal is maximum employment with a long-term inflation rate of 2%, and we anticipate there will be some period of time when the inflation rate is above 2%. That's it. That is what he thinks. Most economists, now there's debate, and I will admit there is debate, about the extent to which the inflation blip in 2021 this year, which will be in excess of 2%. The inflation rate will be more in the area of between 3 and 4%, depending upon how you measure it. But the point is that a transitory blip, or is that a long run change? I believe it's a transitory blip. I'll go back to Delta. It's interesting here. In July, everybody was going to the beach. They were going
Right.
to restaurants. They were going, okay. Those services did increase their prices. There's no doubt about it. I personally have experienced it all over the place. Services increased their prices. I believe that was a one-time transitory upward shift to make up for the pandemic. But now going forward, what if demand slows down a bit because of Delta concerns? That's a really important thing to think about in the fall.
And in the fall, we'll talk to you more, I hope, Laura, to discuss this more. Very grateful you've given us time. Have a good weekend. Thank you.
Nice to be with you, Richard. Right, take care.